we mean the direct method and the indirect method. Now, can you hear me? Can you hear me? Hello?
Yes,
Hello,
ma'am.
class. Can you hear me? Please
Yes,
tell me
ma'am.
if you cannot because very important. Okay, so when we talk about statement of cash flows, we mean either the direct or the indirect method. Now, with the use of the direct method, we are following the cash basis of accounting since we involve collections and payments. On the other hand, the indirect method is related to the accrual basis of accounting. That's why we have to determine the amount of cash provided or used by starting from net income, I mean for the operating activities. Then we add back depreciation, amortization, and then we deduct the increases and decreases in our non-cash assets and our current liabilities. So in accordance with the accrual basis of accounting. Now in 17-5, we are given the additional information for 2021. The net income for the current year, cash dividends paid, the entity sold an equipment costing 200,000, carrying value or book value of 50,000. It was sold for 70,000 cash. The entity issued 10,000 shares of capital. The entity sold all of its treasury shares for 900,000 cash. Now you will notice that in the comparative statement of financial position in 2020, your treasury shares at cost had a balance of 700,000. However, in 2021, it's already zero because of this number 5 data. 6, individuals holding bonds with face of 500,000 exercise their conversion privilege. Each of the 500 bonds was converted into 5 shares of capital. So conversion of liability to capital. The entity purchased equipment for 1.2 million. Land with a fair value of 500,000 was purchased through the issuance of long-term debt. And now we are given the comparative statement of financial position. First column, we have the ending balances in 2020, the beginning balances. Cash and cash equivalents, accounts receivable net, inventory, investment in whole company at equity, land, property, plant and equipment, accumulated depreciation and goodwill. Now, for the liabilities and the equity, accounts payable, notes payable long-term, bonds payable, share capital, share premium, retained earnings, treasury shares at cost. Now, we will begin with the original entries. For number 1, debit to profit and loss for the amount of 3,050,000. That's your net income. And credit to retained earnings. Second entry, debit to retained earnings and credit to cash for the cash dividends paid. Then number 3, debit to cash, credit to or debit accumulated depreciation, credit to equipment, and credit gain on sale of equipment. Now take note that the equipment costs 200,000 and the carrying value is 50,000. So meaning there is a difference of 150,000. That's your accumulated depreciation. So that you debit accumulated depreciation 150,000 credit the cost of the equipment, and credit gain on sales. So that 20,000 is the difference between the selling price of the equipment and its book value or carrying value. Then, likewise, we debit to depreciation for 1,050,000 minus 650,000. We now credit to accumulated depreciation. Now, that's for the accumulated depreciation amount of, we have 1,050,000 and a credit of 650,000 because the original balance beginning of 800, and then we debit to accumulated depreciation by 150. That's why we now get a balance of 650. So that's your depreciation expense for the current year. Then number 4, we debit to cash 10,000 multiplied by 150. And we are going to credit share capital and credit share premium. Now for the 10,000 shares at 150 or 1.5 million, and the par per share is 100. So we multiply 10,000 times 100 or 1 million, the excess is credited to share premium. Then the entity sold all of its treasury shares for 900,000. So take note that our treasury shares in the 2020 column had a balance of 700,000. And normally, treasury shares account is a debit. So now upon sale, we credit for 700,000. The selling price is 900,000. So the gain on sale, we credit to share premium for 200,000. Then in number 6, individuals holding bonds. Now take note that we have the account bonds payable for 2,100,000 and the ending balance of was 1,600,000. So that explains the difference of 500,000 because individuals holding bonds with face amount of 500,000 exercise their conversion privilege on a 1:5 basis. So 500 bonds converted to 5 shares of capital. So the original entry was to debit the account bonds payable. Now we debit, that's why the bonds payable account decreased by 500,000 and we credit to share capital by 250,000. That's the equivalent of 2,500 shares at 100 par. So the excess is 250,000. Now with 500,000 shares, pesos, with the 500,000 pesos and we divide it by 5. So actually, as stated, each of the 500 bonds. So if you have now to divide 500,000 by 500 bonds, then that gives you 500 bonds and we multiply by 5 because each of the 500 bonds was converted into 5 shares of capital. That's now the amount of 250,000 because 2,500 shares bonds payable converted to share capital of 2,500 shares. So we have now credit to share capital and excess to share premium. Then for the number 7, the entity purchased equipment for 1.2 million. So we have now the debit equipment credit to cash. Number 8, land with fair value of 500,000 was purchased. So we now debit to debit land, credit to notes payable for 500,000. That's why in the ending balance, notes payable of 500,000. And we have now additional entries, inventory of 150,000 and credit to cost of goods sold. So we have now the difference of 150,000 as we have the inventory, a difference of 150,000. Increase in inventory reduces cost of goods sold. Then we debit investment in whole company for 200,000 and credit to investment income. Now, originally, the investment account here with a balance of 2 million and 2.2 million, meaning there was an additional acquisition of investment, or there is an increase in the value of the equipment, no? Because of 2 million became 2.2 million credit to investment income. And we have now debit to purchases and credit to accounts payable for the amount of 50,000. Now, this were the original entries. And finally, we are now going to prepare the statement of cash flows. So for the statement of cash flows, now we have the operating, investing, and the financing activities. Now we have the analysis before we finally go to the statement proper. So for our operating, investing, and financing, we begin with net income as given of 3,050,000. And then under the financing, we are going to deduct from financing, or it's a dividend paid, no? And if you can recall in the statement in the problem, as stated, we have now the cash dividend, and here, cash dividend. Dividends received shall be classified as investing cash flow. Now that's for the received, and here, dividends paid shall be classified as financing cash flow because it is a cost of obtaining financial resources. However, the alternative is dividends paid may be classified as operating cash flow. Now we have cash dividend paid this time deducted among the financing columns. So we have the activities now deducting 2.5 million. Then we have the sale of equipment, gain on sale, 20,000. We have to deduct from the net income. In other words, the net income to be considered is to be purely operating. Now, this gain on sale is from other income. Now, depreciation recorded of 400,000. Normally, our formula is add back depreciation. Why do we need to add back depreciation? Because depreciation is a non-cash expense. So we are now talking about cash flow. Issuance of share capital is under the financing activity, sale of treasury share, another financing activity, conversion of bonds payable into ordinary share. There's no cash effect. Now, actually, you can have this in your notes at the bottom. Purchase of equipment is investing. Actually, investing activities would relate to non-current assets, while financing would relate to share capital and to long-term debts or non-trade debts. Now this time we have purchase of equipment reduces investing while sale increases investing. We have now decreased in accounts receivable. Normally, we have to add decreases in current assets except cash. Then we have to add increases in current liabilities. Did not increases in non-cash assets, and we have to deduct decreases in current liabilities. Now, increase inventory, deduct investment income, deduct, and we have increase in accounts payable. So you will notice that the analysis is more of the indirect method used. So we have now the net cash provided once it's positive. It's provided once negative, then it will be used. So under investing, used 1,130,000 because the purchase of equipment amount exceeds the proceeds from sale. And then financing, we have a net cash used of 100,000. The fact that our dividends paid exceeded the issuance of share capital and the sale of treasury shares. So finally, we have now the statement of cash flow, cash flow from operating activities. And we have now the gain on sale of equipment. We have to deduct, actually it follows the columnar figures extended, provided, no? So we have decrease in accounts receivable. We have increase in inventory, investment income, increase in accounts payable. So we have now the cash flow from operating activities. If you are going to prepare a cash flow statement with the use of the direct method, no, in problem 5, then you have to arrive at the same amount of 3,230,000. However, you have to see to it that you have other data given. We are not given complete data as to the preparation of the statement of cash flow with the use of the direct method. Now, we have the investing activities, sale of equipment, net cash, and we have the purchase. So we have the net cash used. And from financing activities, we have a net amount used of 100,000. So increase in cash and cash equivalents of 2 million, and we add the beginning balance of cash and cash equivalents for 350,000. That's why your ending balance, now we prove that it's 2,350,000. Now that's for your problem 17-5, another straight problem in addition to 17-1 already answered yesterday and 17-3. So what am I going to do now is to flash back, share screen, the solution to 17-1, 17-1, and then I will already include 17-2, you try to study, and 17-3. Now, these problems were already discussed yesterday by the reporters. And this morning, I discussed, there we have 17-4 and 17-5, the one I discussed just a while ago. So that would be for your straight problems And then we go to the multiple choice problems. You have a lot of this in 17 that's 8 up to the end. So we have now the problems to be discussed. I am going to discuss up to 10 o'clock. I am going to discuss the multiple choice. So if I cannot finish up to 10 o'clock, siguro mga 10:10, then I will just share screen the remaining solutions. Now we have 17-8, a question on December 31, 2021. What amount should be reported as cash and cash equivalents? So we have now the following accounts given in order for us to determine cash and cash equivalents. Cash, as we have to include cash on hand and demand deposits. Cash equivalents are short-term, highly liquid investments that are readily convertible to known amount of cash and which are subject to an insignificant risk of change in value. The PES 7 provides that an investment normally qualifies as cash equivalent only when it has a short maturity of 3 months or less from the date of acquisition. So the maturity date is 3 months or less from the date of acquisition. So you have there your examples. In other words, investment must be acquired 3 months or less before the maturity. Now, it may be a 5-year investment item. However, the requirement is for it to be classified as a cash equivalent, it must be acquired 3 months or less from the date of acquisition. So we have now the examples of 3 months BSP treasury bill, a treasury bill purchase 3 months before date of maturity, 3 months time deposit, 3 months money market instrument or commercial papers. And therefore, equity securities cannot qualify as cash equivalents because they do not have a maturity date. So in 17-8, we have now checking account 101. This is cash. And then we deduct checking account 201. It's negative, meaning it's a bank overdraft, which is supposed to be shown as current liability normally. However, we have this checking accounts as offset against the other checking account. Then we have time deposit as given time deposit. And here we have commercial papers of 1 million and the 90-day treasury bill due February 28. Now it qualifies as a cash equivalent because it has a maturity period of 3 months or less, counting from December 31, 2021 to February 28, 2022. The 180-day treasury bill is due on March 15, 2022. However, it's now for a period of 180-day treasury bill. Now, as we have to provide these figures with a maturity date of 3 months or less. The commercial papers are in the same category as money market placements. So we have now the total of 3.4 million. That's letter A. Then we go to 17-9. 17-9. Question is the amount of cash reported at the end of the current year. We have now cash balance beginning, then cash flow from financing, 1 million. And then we have the cash flow from operating, the amount of 400,000, and we have from investing of 1.5 million. Now, total shareholders equity, of course, is not cash. So we have now the amount of cash balance at the end of 1.2 million. That's letter A. Then we go to 17-10. Cash on January 1 given is 1.2 million. Then we have the squish figure to be determined. Actually, the question is, what should be reported as cash flow from operating activities? So that you leave that blank first. Cash flow from investing is negative of 2.5 million, and from financing of 800,000. And we are given the amount of cash on December 31. So 2.1 million add back, no? We have the work back process. With 2.1 million, then we add back 800 because it's negative. So when we work back, we have to add back, and as well as 2.5 million. So it gives us the total of 5.4 million, deduct 1.2 million. So the missing item is cash flow from operating activities, 4.2 million. So that's your squeeze figure. Then to number 11, we have now the January 1 balance of 1 million. Then the cash flow from operating activities, question mark. From investing, it's negative of 4.8. From financing, it's positive of 1.8. So we now get the amount of cash flow from operating activities. Again, just like number 10, 1 million 200 or 1,500,000. That's the December 31 balance. From 1,500,000, we have negative 4.8 million, which we have to add back, and the total of 6.3 million, deduct 1 million and 1.8 million. So deduct 2.8 million, the difference is 3.5 million. That's the cash flow from operating activities. Then we go to problem 12. In problem number 12, under the indirect method, what net amount of adjustments required to reconcile net income to net cash provided by operating activities? So we have now the net income reported of 5 million in number 12. The net income reported in number 12 is 5 million, depreciation of 1.9. And we have now the following working capital account changes. So the question is, under the indirect method, what amount of adjustments is required to reconcile net income? Now we have the answer of 1,290,000. If we have now to add back a depreciation by 1.9 million, then increase in accounts receivable is to be deducted. Non-trading equity investment increase. We have the inventory of 730,000 deduct, and we have the non-trade notes payable is non-trade. And we have now your increase in accounts payable to be added. So we have now the additions of depreciation 1.9 million and increase in accounts payable of 1,220,000. And we have now the accounts receivable increased by 1.1 million and inventory of 730,000. So the total now of the adjustment, no, for 1,290,000. That's your answer. It's letter C. Again, add 1,900,000, add 1,220,000, and then deduct 1,100,000 and 730,000. So the net amount of adjustment is 1,290,000. The fact that we are using the indirect method and we are asked only for the net adjustments. Next, we go to number 13. What amount should be reported as net cash provided by operating activities for the current year? Reported amount of net income is 7.5 million. Then we have the increase in net accounts receivable for 1.4 million. That's the net decrease. So we have the amount of 300,000. 1.4 million, that's the difference between 1.6 million and 200,000. So 1.4 million and 1.1 million at year end. So we have now a difference of 300,000. Since it's an increase in non-cash current asset, we have to deduct. I hope you still remember the general formula in the use of the indirect method. Net income, we add, okay, add decreases in non-cash current assets and add current liability. And then we deduct increases in non-cash current assets and deduct decreases in current liabilities. And of course, we add net income, add amortization. So we have now to deduct 300,000. And then your prepaid rent expense increased by 200,000. We have decrease, the prepaid rent at January 1, beginning 600,000, ending 400,000. Column 1 beginning, column 2 ending. So we have decrease in a prepaid rent expense, so to be added. Then we have increase in accounts payable by 500,000. We add and decrease in accrued expenses by 250,000. We deduct. So we have now the net cash provided by operating activities. We have now the computations supporting the above figures. The equity investment is fair value under comprehensive income. Now we have an investing activity. So we have now the operating activities. That's the amount of the answer to number 13 is letter D of 7,650,000. Then for number 14, what amount should be reported as net cash provided by operating activities? So in number 14, our answer is 6,940,000 net income. Then we have increase in investment, carried at equity, representing shares in net income of the investee for 550,000. We have to deduct because it's an increase. Then decrease in unearned interest income. Again, we deduct the fact that This is a decrease in current liability. And the amortization of premium on bonds payable, again, we have to deduct a premium on bonds payable actually decreased by 140,000, meaning we have to deduct because it's a decrease, and increase in deferred tax liabilities. So we have now the net cash provided by operating activities in number 14. And we have the notes at the bottom in order to support or give the reasons why some items were excluded. Then we go to number 15. What amount should be reported as net cash provided by operating activities? We begin with net income of 2.5 million. Then we have the increase in accounts receivable by 400,000. Then we have to deduct being an increase. So the net cash provided by operating activities using the indirect method is 2.1 million. Using the direct method, now to probe, you have the accounts receivable on January 1 for 1,300,000, and we have the sales of 8 million, sales of 8 million, and we have now to add sales and accounts receivable beginning. Then we have the total. Then accounts receivable ending is 1.9. Now we add back 1.6 and 300. So 1.9, and we deduct accounts written off of 70,000. We have the collections excluding the recovery from bad debts. Then we have the recovery of accounts written off for 20,000. We have the total collections including recovery. And we have the cash expenses. We now have the difference as the net cash provided by operating activities, which is equal to the amount using the indirect method. So that the answer to number 15 is 2,100,000. Then we go to number 16. The question is, what amount should be reported as net income for the current year? So net income now is the squeeze figure. Normally it's at the top. Now it's missing, so you have to start from the bottom and work back. The cash flow from operations or operating activities equals 4 million as given. Then we have the gain on sale of equipment. We have to deduct being considered as other income. The amount of gain is 300,000. Then we have the gain on, do you have the depreciation in the amount of 900,000? Normally, we add depreciation being a non-cash expense. Then decrease in prepaid expenses for 200,000. We have to add, and we have now your decrease, no? A decrease in accounts receivable of 100,000. Still we add 100,000 decrease in accounts receivable, increase in inventory by 50,000, and we have decrease in accounts payable by 150,000. So working back, we arrive at the net income. So anyway, the solution in working back is the negative signs we add and the positive signs we deduct because we use the workback process. Now, next number is, so number 16, the question is the amount of net income for the current year. So the amount of net income as computed is 3.3 million. That's letter A. Then number 17, what total amount should be reported as supplemental disclosures in the statement of cash flows prepared using the indirect method? So we have now the income taxes paid of 325,000 and the net interest payment of 320,000 for here given 220 net interest payments. What total amount should be reported as supplemental disclosures in the statement of cash flows using the indirect method? Now take note, we have the net interest payments in the amount of 220,000. Please make correction. 325,000 add 220,000. So it's correct to be 545,000. The total amount to be disclosed is a letter C. So we now get 545,000. Now we go to number 18. Number 18. What amount should be reported as net cash provided by operating activities? So in number 18, the net cash provided by operating activities, we begin from net income of 2,120,000. We add depreciation, 240,000, amortization, 80,000, and deduct gain on sale of land for 200,000. We deduct the fact that it's a gain. Then we have to consider now the increases, decreases. Decrease in accounts receivable for 60,000 from 680 to 620. Then we have increase in inventory for 120,000. Next, we have decrease in accounts payable. Deduct the amount of 140,000 and increase in accrued expenses. We add 160,000. So the answer to 1718 is letter A. Then we go to number 19. We go to number 19. Question is, what amount should be reported as net cash provided by operating activities? So number 19 is C. We have sales, 2.8 million minus cost of goods sold. We deduct the other expenses, including distribution and administrative interest paid. Then we have income tax expense, net cash provided by operating activities. Then interest expense of 80,000, premium amortization of 20,000. Now you have your interest paid 100,000. The answer to number 19 is letter C for 670,000. Next, we go to number 20. What amount should be reported as net cash provided by operating activities? So in number 20, we now get the answer of letter B, 4.4 million, including net income, add depreciation, we add back loss, and then we have to deduct decrease in accounts payable, and we have to add decrease in inventory and deduct increase in accounts receivable. So your answer to number 20 is letter B. Next, 21, using the indirect method, what amount should be reported as cash provided by operating activities. So it's still operating activities. So number 21 is letter A. I'll just share screen. Number 21, it's still operating. Number 22 is still operating. And we have number 23 is still operating. And number 22 is already investing 24. Okay, investing activities. Okay, so for investing, take note that investing activities relate to long-term assets or non-current assets, non-current and non-trade. So we have now your purchase of land, negative because it's a payment, 3.5 million. And we have now the vendor financing for 1 million as stated. We add, then we have the cash payment, and we have now the purchase of plant for cash, 2.5 million, and cash proceeds from sale of plant. So we have now the cash flows from investing activities of 4.6 million. Now the buyback of ordinary shares is actually a purchase of treasury shares and therefore a financing activity. Now in number 25, this is a financing net cash inflows. In number 25, net increase in borrowings for 1.7 million. That's 802,500. So we have now 1.7 million. That's increase in borrowings. Then vendor financing of property for 200,000 negative net cash inflow, 1.5 million. Issuance of share capital, dividends paid, and so we have the net cash flow from financing activities. So number 25 is letter D. Then number 26,
Ma'am,
yes.
ay lapaw, nagalibam sa 10.
Ay,
Karon kabus.
you have class. So I'm sorry. I'm sorry you did not remind me that you have class. O sige, I'll just share screen. The rest, share screen ko So, okay na. Tapos na. And then, we will have your report. Ma-report pa ang next group. At sige, thank you so much for reminding me na gamon lang ako. Oh, that's 1740, okay? So we now go to the reporters of chapter 18. Now we have chapter 18.